So lesson 3 is Forex broker selection criteria for retail traders. And the thing is, back to my Father Time story here, but when things have changed a lot in the Forex industry, if you're learning to trade the Forex now, you're at a big advantage because the Forex, 8-9 years ago, when all this started, retail Forex trading in the United States and many other countries, they were already doing it in other countries. Online. We were last, I think. All the big economies. And when it started here, the retail Forex trading industry and brokerage was a complete mess. But now, if you look at the top 10 brokers, and you can throw out the names, it's okay. Forex.com, FXCM, FX Solutions, and we're not in the US anymore, but still, you go to the top 10, they're all the same. Their charting platforms might look different. But I'm just saying that the actual execution end, everything is evening out. It's the competition, and the spreads are tightening, and that's good for us. It's good for traders. Competition is good. Competition is good for the brokers. So if you want to evaluate a Forex broker, the criterion is still the same, but the answers are changing to the questions you might ask. But just remember one thing, the objective of a broker is to make a profit from you trading your little butt off. The more you trade, the higher their profits. They do not care if you make a profit. They don't care if you lose your entire account. Okay? But at the same time, their objective as a business is to make a profit. And the more you trade, the more profit they make. If you lose money and you lose your entire account, they don't care. They don't. They never did. Now, it's not the job of a Forex broker to tell you when and how to trade. It's the job of Forex early warning. The job of Forex early warning is bigger than that of the brokers because they're all the same anyway. There's really no difference between the brokers. There's not a whole lot of questions you can ask anymore. But this is sad and unfortunate, but last week somebody emailed me a 48-page document that was written by a top 5 broker that you've all heard of, and it was how to become a successful Forex trader. And out of 48 pages, about a half a page was accurate. The other 47.5 pages were garbage. And I reported this on the Yahoo message board. It's just, don't ever trust a broker to tell you how to trade. They actually suggested in this document that you put in 125th limit order and 115th stop. So your risk to reward ratio would be greater than 1 to 1. Now that, my friends, is how a broker is going to tell you how to trade. This is exactly what this document said. I'm quoting it. This is a top 5 broker that you've all heard of. This is a joke. Don't ever trust a broker to tell you what to do. So, learn to trade the Forex and get a good system and stop worrying about your broker. Just get a top 10 broker and go with it. Now, the one thing that you want to be concerned about is the safety of funds in your Forex trading account. In other words, I hate to go back in time again, but 7-8 years ago when an entire broker would go bust and take all of the accounts with them of all the customers because the customer funds were not segregated from the operation. And naturally, these brokers were offshore outside the United States and no one could get their money back. Well, that's all changing because obviously when something like that happens, it's a watershed event, things change. So accounts in the United States are becoming more and more protected. For example, there's different types of firms getting into the Forex business. The traditional Forex brokers like Citibank and stuff like that, they're all getting into the Forex business, but that's good because you can have $100,000 in FDIC insurance in your Forex trading account. So if you want to ask questions to your Forex broker, read this section here and ask the following questions. Are your accounts insured? Yes or no? Are you registered by the NFA? Get their registration number. And make sure that they follow, because if they do that, at least you know they have their net capital right. And I'm telling you, these NFA and CFTC, they're pretty tough. They're monitoring these guys to make sure at least they have following the rules of net capital. And then anything over and above that, like an insured account, that would be great for Forex traders. You have to worry about your money. Or you don't have to worry about the whole thing disappearing. You can just turn around and start worrying about your trading. The other thing you want to do is never put too much money in your Forex account. You're trading at 50 to 1 leverage. Okay, and I give some actual mathematical examples. If you build up some profits in your Forex trading account, you can take those profits out and keep trading with the amount. It's something that you got to learn, you know. If you want to have so much money in your Forex trading account, when you build up way above that, we'll take the extra money out, and then you'll still have your working amount that you keep in there. The amount you want to have in there for your working amount that you leave in your account all the time to make trades with, that varies from person to person. Okay? Depends on your it depends on your risk capital and other things. And the best definition of risk capital that I've ever read is the one that I wrote. It's on my website under the Forex trading risks and everything. There's actually a link to it on every trading plan. So when people talk about risk capital, they're not specific. When we talk about risk capital, we give you exact guidelines to the penny as to what risk capital is. So know your risk capital, and then your working capital is based on your risk capital. Your working capital is how much you want to keep in your Forex trading account. If your risk capital, if you're a bazillionaire, your risk capital is $100,000, you still would never put $100,000 in a Forex account. You're still going to start by trading, paper trading and doing micro lots. I don't care how much money you have, you never violate those rules. So when you open up a new account, you want to make sure you're able to, or you open up a live account, regardless of the amount of money, you want to be able to trade micro lots. So the question you need to ask your broker is, can I trade micro lots? And then you need to get your withdrawal procedures down, whether it's bank wire or, having them send you checks or whatnot. You can review all that with them before you start with the broker. The next thing I want to talk about related to brokerage is order types and placing orders. When you're using Forex early warning and you're trading the Forex market, you will use market orders. And you will likely most of the time not use limit orders. You can put in some really greedy limit orders if a currency pair is reversing and it's spiking down and it hits a limit, that's fine, or if it spikes up. But partial limit orders are great because it helps with the rules of money management that we project. For example, if you go to the trading tips and you read lesson 28-29 about money management, we recommend scaling out lots when you're profitable. In other words, if you're up 75 pips on a trade, you've got 4 mini lots running, scale out 2, make sure your stop's at break even, let it go, and then check the market later. It's money in the bank. So, but you can also set a partial limit order. If you open up a 4 mini lot trade, scale out 2 mini lots, you just set a limit order at plus 75. It's somewhat arbitrary, but you're capturing 75 pips, which is more than every scalper out there. So when you get in a good solid trade, scale out some lots, and you can do that with partial limit orders. You don't need to use entry orders. It's an unnecessary risk because you're going to trade using the Forex heat map. If you're using the Forex early warning method, you're going to enter orders. And stop orders, absolutely positively. You got to leave your ego at the door. It's time. Everyone plays trades with a stop around here, and not this 120 pip, 115 pip garbage you see here. You use our guidelines and the trading tips and the Forex heat map for entry. You have a managed entry. I'll tell you something right now. If you traded in the Asian session using Forex heat map, the only stop order you need is stop going up. Okay. So we trade the right way. We're much more confident in our entries. And when the market is mixed, the Forex heat map will show that, and you'll know that you have a risky entry on your hand. That's how we trade the market. Now, a special situation with brokerage is the Sunday night gap ups and gap downs. If all the financial markets are in a massive turmoil, like they were back in 2008 when the stock market sold off and all the pairs sold off and things were really bad, there were gap ups on Sunday night along the order of currency pairs were gapping 500 pips on Sunday night. So all the more reason to know what your, number one, you have to set a stop. Number two, how are they going to fill that order if you're in a trade? Are they going to fill it, after it gaps, or will they fill it at the price that's in the middle of the gap? And it's your job to know this. Contact your broker and find out. Don't find out the hard way. If it happens to you, don't email me. I'm telling you what to do. You got to contact your broker. It's that, it's that agreement. It's called that brokerage agreement, that one that you didn't read when you clicked on the button that says, I have read this. And you clicked on yes and you didn't read it. Now you got to go back and read it. Because that's what we do around here. We do the homework around here. Everyone does their homework. We're all adults. Go read the agreement, email your broker, and find out what's going on. Now, you've seen in even the last couple of weeks, the Sunday night gaps, there's been a gap. Not a big one, but there's been some. You can see those gaps on Sunday night. Now let's talk about broker types. It used to be you would have a whole bunch of brokers were deal desk brokers, and then you had a handful that were non-deal desk. They were generally ECNs. Folks, everything is changing. Everybody is going, top 10 brokers plus everybody else, everybody is going to the variable spread model and or ECN. The market will produce the bid and the ask, not the broker. Now, there's still deal desk brokers out there, and you can get one if you want. Personally, I don't have a huge, I don't have a problem for using a deal desk broker as long as the spreads are reasonable. The only problem I have with the deal desk broker is, the morality of taking the other side of the trade, but I'm not here to judge them. Besides, they hate us anyway because we all bought the yen pair at the Asian session. They're losing. So, but if you are with any broker that's either a variable spread broker, and then the spread is created by the bid and the ask, which is ultimately created by the market, you're in great shape. You still want to do some shopping around if your spreads are unusually high. But if you go to an ECN and you're paying a small commission, I don't have a problem with that either. But the trend right now is towards variable spread and ECN, and the trend is away from deal desk. And the trend's going to continue. The spreads are going to continue to tighten. And but that's good for us. And really, it's good for the brokers too. They have to run an honest operation, and I don't have a problem with the fixed spread broker. I really don't. It's not a problem. It's just your trading method is 100 times more important than any broker. So if you have the right method, you can make this whole system work, porch early warning, with a fixed spread broker. But you should really check this an ECN or variable spread market to see how the spread is created. Stuff like this. This is why there is a variable spread, because you have a bunch of different banks or liquidity providers to the brokers offering their lots of currency at certain bid and ask price. The highest bid and the lowest offer always creates the spread. Once again, I don't have a problem with a deal desk broker as long as the spreads are reasonable and they don't manipulate the spread. But all of them got in trouble for manipulating the spread anyway, so I think in that regard, the NFA, CFTC, they're doing their job. Now, the one thing that you can focus on is if you're trading larger time frames for more pips using the Forex heat map, doing what we're doing, the spread is not that important. But on some of these exotics, I think you need to seriously check the spreads. Anything you have and the criterion should be maybe around 7 or 8 pips. If you should figure out what pairs you have on your trading platform that have a spread maybe greater than 7 or 8 pips, and I think you can shop those around. I mean, if you have something out there on your platform right now that's like 15 pip spread, you need to shop that. You don't need to have any 20 pip spreads on your platform on 28 pairs. You don't need to have any 15 pip spreads. You can have some 7s and 8s, maybe 1 or 2 around 10. It's always going to be, you know, pound New Zealand, pound Aussie, maybe something like that. Might have around 10. But if the rest of them are all in the proper range, it's no problem. And many of them, you know, all your euro, I mean, your euro should be 1 or 2, even less than 1 these days. You know, all your majors should be 3, something like that, 2, 3, maybe 4. And then the rest of your exotic pairs, you know, I mean, there should be some 4s and 5s in there. Stuff like the Euro Swiss, Euro Pound, it's going to be 3 or 4. But some of the ones, Euro Aussie, Euro New Zealand, if there's 6, that's fine. But I mean, it's easy to figure out. Now, the brokers aren't going to give you a straight answer on this, so you have to open up some demo accounts and do stuff like that. But once again, if you're serious about this, that's what you're going to do. You know, if you're serious about finding a broker that you think is that much better than the other guys, then you got to do more homework. Okay, so if you're in the U.S., we're trading at 50 to 1 margin. That means for each dollar you put up, you get $50 of value. And if you want more than that, you'll have to trade with a broker that's outside the U.S., more than likely Switzerland or something like that. Once again, but if you take your money offshore, you better make sure, you better go back to the top of this lesson and check to make sure how they're protecting their clients with a risk of account loss. Because nothing like an insured account in trading at 50 to 1, you have total peace of mind here in the U.S. If you're going to take it offshore or you're listening from another country, we've got people listening right now from Europe, then you'll be trading in Switzerland. You're subject to those rules and regulations or wherever your broker is domiciled. Okay, price alerts and alarm systems. I always tell Forex traders to set up, you know, the basic setup with Forex Early Warning, just to set up a MetaTrader so you get the price alarm systems. But once you graduate and you open up another Forex account, you become a veteran trader. There's other alarm systems available, desktop, and you can get alerts set to your cell phone and things like that. You even get email alerts these days. You can get all kinds of stuff. But this is a question you can ask your broker if you're interviewing other brokers, or check their website. But you definitely want to keep the rate alerts. Start off with the basic MetaTrader system and the desktop price alarms, then you graduate from there. If you're transitioning from paper trading to real money trading, you've got to get a broker that trades microlots. Leave your ego at the door. You're not going to start off by trading 10 mini lots. Don't do something that myself or any of the owners of Forex Early Warning never did. Don't think you're smarter than everyone. You don't need to be the smartest person in the room. You need to be the wisest. You need to do the right thing. And everyone needs to go from paper trading to trading microlots. Find a broker that will let you trade microlots and start with microlots and get your game on. Take your time. And then 6 months from now, if you're consistent, you can be trading all the lots you want. So, I think that's real important. What else? Also, I think it's becoming less and less important, but another Father Time story here, but it used to be you'd have a lot of requotes and slippage and all these problems associated with brokers. And way back when it all started, I mean, they would halt trading after NFP and all this crazy stuff. But that doesn't happen anymore, so you're not going to get into too many squabbles. I haven't had a squabble with a Forex broker in 3 years. So that shows you that this article, when it was originally written, was written one way. And now that things are changing, that these are things you may not even encounter. you may not ever have a bad fill on a trade, because when you have a variable spread or ECN type access to the market, it's going to get filled at the next available price on a market order. So I don't really think bad fills and all this stuff is going to be a problem. The thing you want to concern yourself with is those Sunday night gaps and getting a written copy of your broker's execution procedures at those times, because that's something that can be challenged. And if you're trading 1 minute after non-farm payrolls, you're not using our system anyway, so that's your fault. So think about these things. Think about the real risk of trading and the gaps and things. That's what you should be concerned with. Now, I know that some brokers offer some great charting packages. But what I do at Forex Early Warning is I just set you up with the basic setup, the basic MetaTrader setup, the basic trend indicators, and there's some videos on our website at the bottom of the homepage to give you some variations how to set up things. But after you do that, if you find some beautiful charting platform somewhere, well, guess what? It's in the homework assignment. I'm giving you the right to do that if you're a veteran and if you want to transfer the free trend indicators to another platform. But that's not something I'm going to show you how to do. That's something you learn how to do on your own because you're a veteran and because you're an adult. You figure these things out. I set you up with the starter kit. I set you up with basic trend indicators. And I get your wings on and let you start flapping them. Once you fly away and you're a veteran, you're making pips consistently, you should go out and entertain looking at other charting platforms, and maybe you'll find one that suits you better than MetaTrader. But by then you'll be safe. You'll come across a rock solid charting platform that might be, in your opinion, better than MetaTrader. Heck, you'll set up the charts in 15 minutes. Boom, you'll set up your alarms on that system. I don't have a problem with that. But for the newbies, it's mandatory that you set up the free trend indicators on MetaTrader. Start to set the price alarms and start to learn how to just trade Forex. Once you get your wings on and once you fly, well, then you can run off and do other things with your charting system. They're out there. God bless you if you find one you love. All right. If you ever go to a Forex broker rating website, don't believe anything you read. Only believe what you actually experience when you download a platform and operate it yourself. If you like it, and you like everything about it, then that's the platform for you. It's a personal taste. No one's going to tell me who to use for a broker. Nobody's going to tell me what car to drive, and nobody's going to tell me what to eat for lunch today. I do it all myself. And you're going to do it also too. Who should you use for a broker? The one that suits your situation, not mine. If you have a trading platform that doesn't allow microlot trading because you did that 3 years ago and you're a successful trader, then you don't need it. But if you're a newbie and you need to trade microlots, you'd better get a platform that allows microlots. And not everyone's situation is the same, not everyone's risk capital is the same, and not everyone's approach to the Forex is the same, although as far as trading methods, two Forex early warning traders are speaking to each other, their approach is the same. That's the approach to trading, which has nothing to do with brokerage. So if you who should you use for a Forex broker? That's the wrong question. Here's the right answer. The right answer is we're all adults, go out and figure it out. Get reading this article, and then when you're on the phone, write down questions, speak to your broker. But to get started with the basic setup, we'll set you up with the basic MetaTrader setup. And like I said, if you're using one of the top 10 brokers, pretty good chance you're not screwing things up. So, in closing, just be realistic about what Forex traders do. They're strictly a middleman. That's it. They want you to trade your brains out and scalp. I want you to trade with the trend, use the proper entry management system, and stop orders. I don't want you to do it the way the brokers want you to do it. I want you to do it the way it's written up in the 35 lessons and at forexearlywarning.com. So if we can get everyone to at least trading the right way, the discussion of brokers just becomes less and less important. Just use a top 10 broker, and you'll be fine. go through this lesson carefully, and remember, it's just becoming the broker you actually use, if it is one of the top 10 brokers, is becoming less and less important. What's really important is to make sure you're making pips. Okay, that's lesson 3. Forex broker selection criteria for retail traders, and that's tonight's training. Next thing we're going to do is we're going to